Accumulation, no selling, don't give a fuck if the Fed stays hawkish. Damn it, boy. We got wrecked today, man. I want to play you a little clip of Jay Powell's final remarks real quick. This is his opening remarks on the FOMC meeting today.
Fuck your fucking options. Fuck your fucking zero DTE calls. Fuck the economy. Fuck inflation. Fuck your soft landing. I am sick of this shit. Fuck Wall Street. Fuck you all. I'm fucking out.
Lord have mercy, boy. We got hit with that.
Fuck your fucking options.
We got hit with that shit today. Got hit with the hawkish Fed, Extremely bearish. And honestly, a lot of this data that I tell you guys to look at, you would have known. The jobs reports coming in hot, inflation reports coming in hot. That's no good, There's signs of lingering inflation. Now, I just pulled up the CME Fed Watch tool. This is for the next meeting, January 29th. And there's a 6.4 chance of ease. What the fuck? Dude, no. I refuse to believe this shit. It could be the case, This is extremely bearish. If they're pausing, that's extremely bearish for markets, That means no money printer. They're just going to leave rates high as fuck. That's bearish, Just keeping shit 100% with you guys. Now, things could change, though. Things could change if we get some better data, economic data. I mean, this isn't the end of the world yet, okay? The fear and greed index is back to 69. This is good buying territory. And I told you guys the BTC dominance is ticking up, These altcoins are getting smashed. Like, I mean, it was a bloodbath today. Altcoins down in the double digits. I want to talk about a little bit about this shit. Okay? Trump's tariff talk is making the Fed cautious about cutting interest rates. I love how they like to blame it on Trump. This does have something to do with that, but also because of the economic data that's what they make their decisions on. It's not all on Trump, If inflation wasn't coming in hot and the jobs reports weren't shitty, then they wouldn't be thinking like they're thinking. That's why it's good to look at this data that comes out. You can follow the economic calendar, look at this data for yourself. That way, if it's like all this bearish data coming out, what do you think the Fed's going to do? They're not going to be happy. They're not going to like this data. So now the markets were red as fuck today because the market's kind of repricing in these rate cuts. Because now, like I just showed you, 6% chance at the next meeting of them cutting rates. So they're basically not even, the market's got it priced in that there's going to be no rate cut at the next meeting. That's extremely fucking bearish. Anyways, let me read some of this. Key takeaways. Officials at the Federal Reserve have become more cautious about cutting interest rates because of more uncertainty about President-elect Donald Trump's plan to impose tariff on trading partners. The Fed has been keeping rates high to contain inflation, and some central bankers see a risk that tariffs will push consumer prices higher. The President-elect clashed with Fed Chair Jerome Powell in the former first term because Trump thought interest rates were too high. Let me just read some of this, okay? Actually, I don't want to get too much into it, Okay, let me just read some of this right here. I was reading this on CBS News. While the Fed's 2% inflation target has proven elusive so far, it has been successful in bringing inflation down from its highs without derailing an economy that continues to hum along. Okay, however, if inflation continues to stay above target in the new year, the markets may be too optimistic on how many cuts the Fed may deliver. The Fed's first rate meeting of 2025 is scheduled for January 28th to 29th after Trump's inauguration. About 8 in 10 economics expect the Fed to hold rates steady at that meeting, according to financial data from FactSet. Okay, and I just showed you, that's probably right, because this is a lot of economic analysts going in on this CME Group Fed Watch tool, okay? They have all 6%. That is fucking bearish, Unless we get some extremely bullish economic data on inflation and jobs and stuff between now and then, maybe they might be doing that. They might leave it. Now, I want to talk about a little bit of these interest rates and what that means for the crypto for the whole, really the markets in general, but specifically for crypto, okay? This is on, I just found this on Google or something. All right, so what consequences do interest rate changes have for the crypto sector? Changes in Federal Reserve interest rates have a considerable effect on the crypto market. When the Fed raises rates, a risk-off sentiment often prevails, causing investors to shy away from riskier assets like cryptocurrencies. That's right. When they start raising rates, people buy gold. They put their money, they stay in cash, you know, and smart money is accumulating while things are cheap, you know. But overall, people are not, they don't feel safe in risky assets because the balance sheet is getting dried up. When they're not printing money, they're taking money off. There's a difference. They're taking money off the balance sheet when they're raising rates, and when they're cutting rates, they're adding to the balance sheet. They're printing money. Okay, once you understand this, it just makes more sense. It's simple. It's really some simpleton shit. I don't know why people think this market stuff is so hard to understand. It's really not. It's just so simple. It's just so simple, guys. Anyways, let me continue. Higher rates make borrowing more costly and elevate the returns on safer investments, subsequently diminishing demand for cryptocurrencies and often resulting in price declines. That's right. In a high interest rate environment, banks are more strict on who they give loans to. For example, if the interest rates are very low, they're not going to be requiring a super high credit score. They're not going to want, you know, like a 20% down payment, et cetera, et cetera. Now, with the interest rates as high as they are now, you know, they're going to want to see like a fucking 800 credit score, like 5 years of employment history, 20% down payment. You know what I mean? This is a huge difference. It's a huge difference in how easy it is to access loans and money. Because when the rates are high, the money's not there, guys. It's dried up. When there's usually, when rates are high, it's a bear market generally. Now, what happens in the bear market? There's no liquidity. Everything's dried up. Everything's gone, and the money is moved to other assets that are safe. Risk, you know, risk on, risk off. Okay? Now, well, where was I reading? Okay, conversely, rate cuts lead to cheaper borrowing. Like I said, when they cut rates, that's exciting. People, they're printing money. The money is flowing. Conversely, rate cuts lead to cheaper borrowing, with investors more willing to invest in riskier assets like cryptocurrencies, usually resulting in an increased crypto price due to more liquidity and an enhanced risk appetite among investors. Like I said, when they're why do you think the value of these homes and stuff increases when the rates are down? Because there's more demand. The banks are loaning money to everybody, you know. When the rates are high, the prices are low because there's no demand, you know. It's just, it all, once you guys understand this shit, it just makes sense. I don't know. My brain wraps around it. It wouldn't make sense to me listening to me talk, but having exposure, it starts with putting your money in it and watch what happens, and you start reading and researching, you know, and then one day it just clicks, guys. One day it'll just click. All right, let me read a little bit more on this. I want to talk about Donald Trump briefly. How might interest, oh yeah, I just read that. How does economic data shape Fed decision-making in fintech startups? Stronger than expected economic data can greatly affect the Federal Reserve interest rate strategy. Like I said, we get some good data that could easily change the course of what's going on. You see how quickly the markets adapt to this data. And honestly, I can even go beyond and say that most people trade off this data more than they will looking at charts, guys. Why do you think markets move on these days? People are trading this data. They're not, yes, there's guys using TA and they're trading and they're doing all this stuff. But guys, I will go ahead and be bold enough to say 70% of people are trading off FOMC meetings and inflation data and shit, you know? PPI, CPI, jobs reports and shit. It's just volatile days, you know? Robust economic growth and a resilient labor market allow the Fed to adopt a cautious approach when considering interest rate cuts. If inflation remains high, the Fed might opt to slow the pace of rate cuts to avoid easing too soon. For fintech startups, high interest rates can translate to greater margins and returns on capital for lenders and neobanks. However, these higher rates can also slow down growth as borrowing demand wanes and underwriting criteria tighten, leading to increased capital costs and fundraising challenges for fintech leaders, especially early stage firms. Okay, so let me just let me just get into this real quick about the Trump thing. All right. Trump administration has already unlocked new era for U.S. crypto. You know? America, fuck yeah. Coming again to save the motherfucking Bitcoin. America, fuck yeah. No more of that liberal bullshit. I'm ready for Trump, man. I'm ready for all this bearish shit to stop. Honestly, they fucked this market up. You know, I don't think we're gonna. People are saying, oh, there's a lot of Democrats that are saying, oh, Trump's tariffs are gonna send us into a recession. Where it's gonna go to zero. Everything's going to zero. They can't be worse than what we've already been dealing with. My personal opinion. All right. Anyways, incoming Trump administration heralds a new era for digital assets in the U.S. Report said. J.P. Morgan said the worst regulatory environment for crypto markets is now in the past. New crypto policies could take up to 12 months to have an impact, the report said. Donald Trump's victory in the November presidential election is already ushering a new era for crypto. Not only does this new administration bring a sense of crypto friendliness, but also has shown an eagerness to promote the asset class. Yeah, so he's trying to prop the U.S. up and make us number one. Bitcoin mining, crypto fucking powerhouse, guys, you know? I don't even really need to read this. Like, most of you guys on my channel already know. You guys probably voted for Trump because you know better, you know? America, fuck yeah. Going again, I say that motherfucking Bitcoin. Trump, he's coming in by January, about to wreck bears. Yeah, I think so. I think January is going to be much better for us, boys. This could be just a big nothing burger, you know? In the grand scheme of things, this really could just be a big fucking nothing burger, you know? Like, this really could. This could just be scaring people off to sell life-changing gains. But it is also good to keep this in the back of your mind, of this bearish-ass shit that we're facing. Some good economic data could change course, you know? That's all it takes. So, don't think it's the end of the world. It's not. It's not the end of the world, guys. Now, if we keep going towards the next Fed meeting and continue getting bearish data, then I think then that it might become a reality, you know? That's something to keep in the back of your head. You can't be, you know, you have to look at the data and leave your emotions out of it. We all want this shit to rip, you know? But sometimes it just doesn't happen that way. I don't know, but we'll see. I'm still very optimistic, guys. I'm still bullish. You know, all the higher time frames and stuff, still bullish. This is just a little speed bump, I think. But yeah, with that being said, boys, if you get any value, like and subscribe to my channel. And yeah, hold down the fort.